Hey, Young Money Mentors crew. Want to grow your wealth without the fear of losing it all? You're in the right place. Today, we're diving deep into how to diversify your investments in 2025 to build a rock-solid portfolio that thrives in any market. Whether you're starting with $100 or $10,000, this guide will show you how to spread your money smartly across stocks, bonds, real estate, and even crypto. I'm Young Money Mentors, your go-to for making money work for young adults. Hit that subscribe button, grab a notebook, and let's build wealth safely together. Let's start with why diversification matters. Imagine putting all your money in one stock, say, a tech company. If it crashes 50%, your savings are toast. But a diversified portfolio? It might only dip 10%. In 2022, when tech stocks tanked, diversified investors lost way less. Diversification spreads risk, like not putting all your eggs in one basket. I learned this the hard way. My first $200 investment in a single stock dropped 40%. Now, my diversified portfolio stays steady. For young adults, starting small with diversification sets you up for millions later. Like this video if you're ready to diversify like a pro. Before we dive into strategies, let's cover asset classes. Stocks are shares in companies, offering high growth but volatility. Bonds are loans to governments or corporations, steady but lower returns. Real estate provides passive income, and alternatives like crypto or commodities add spice. Each has unique risks and rewards. For example, stocks average 10% annual returns over 50 years, bonds 4 to 5%. My $1,000 portfolio mixes 60% stocks, 30% bonds, 10% alternatives. It's grown 8% yearly. What's your dream portfolio? Drop it in the comments to join the convo. Let's kick off with stocks and ETFs, your portfolio's backbone. Exchange-traded funds, or ETFs, are baskets of stocks, like VOO, which tracks the S&P 500's 500 top companies. With $1,000, you can buy 2 to 3 shares of VOO, with a tiny 0.03% fee. I put 60% of my portfolio in ETFs, VOO and QQQ for tech exposure, and saw 9% returns last year. ETFs are safer than single stocks, which can crash overnight. Pro tip: mix broad market ETFs like VOO with sector ones like XLE for energy. Links to Robinhood and other platforms below. Tried ETFs yet? Comment your favorite. Next, bonds, your portfolio's safety net. Bonds are loans you give to governments or companies, earning steady interest. In 2025, Treasury bonds yield 4 to 5%, low risk. For $1,000, buy 10 shares of BEND, a bond ETF with a 0.03% fee. Bonds saved my portfolio during the 2023 market dip. My 20% bond allocation barely budged. Aim for 20 to 40% bonds, more if you're risk-averse. Pro tip: check bond durations. Short-term bonds are safer in rising rate environments. Links to Fidelity and bond ETFs below. Bonds in your portfolio? Share your strategy in the comments. Now, let's talk real estate, a passive income gem. You don't need to buy a house. Platforms like Fundrise let you invest $10 in apartments, commercial buildings, or warehouses, earning 8 to 12% returns. For $1,000, diversify across 10 properties. My $500 in Fundrise earned $55 last year, no landlord stress. Fees are 1% annually, so check terms. Real estate adds stability when stocks wobble. Pro tip: reinvest dividends for compound growth. Links to Fundrise below. Real estate investor? Drop your tips below. Let's spice things up with alternatives, crypto, gold, or commodities. These are volatile but diversify your portfolio. For $1,000, allocate 5 to 10%, like $50 in GBTC, a Bitcoin ETF, or GLD for gold. My 5% Bitcoin stake jumped 30% in 2024 but crashed 20% once. Keep it small. Gold hedges inflation, averaging 5% returns. Research heavily, crypto scams are real. Links to safe platforms below. Crypto or gold fan? Comment your pick and why. Diversification isn't set and forget. You need to rebalance yearly. If stocks grow to 70% of your portfolio, sell some and buy bonds to hit your target, like 60% ETFs, 30% bonds, 10% alternatives. My 2024 rebalance kept my portfolio steady during a dip. Check quarterly, use apps like Wealthfront, link below. Pro tip: set calendar reminders to stay on track. How often do you check your portfolio? Comment below. A few bonus tips: don't over-diversify, 10 to 20 assets are enough. Use tax-advantaged accounts like Roth IRAs, our next video dives in. Avoid emotional trading, stick to your plan. My biggest win was adding Fundrise for $60 yearly income. Comment your diversification win. Want more investing hacks? Like this video and subscribe for weekly tips. What's holding you back from diversifying? Drop it in the comments, and I'll help. That's your ultimate guide to diversifying investments in 2025. What's your portfolio mix, ETFs, bonds, or a bit of crypto? Comment below to join the convo. Subscribe for our Roth IRA versus 401k video next. Hit that bell so you don't miss it. Check the description for links to Robinhood, Fundrise, and more. Thanks for watching, and let's build wealth safely together.